Yo, what's up everyone? It's Zora Tour here. Welcome to my channel Chart Strength on YouTube, where we're basically reviewing charts every few days. I do look at the charts on a regular basis every single day, but upload whenever I get an opportunity to. Today I kind of wanted to look at the regular charts, and with all that FDIC, the Federal Reserve, and the Treasury Department all kind of coming together to save the banking system from an apparent liquidity problem. So I wanted to chat a little bit about that and kind of document my thoughts on what is going on and share it with you guys. So let's see what our regular charts are saying. So you can see right here, we'll take a quick snapshot. The Dow's down today, but it had a pretty big day. The S&P 500 is down 1%. NASDAQ is down as well. The least amount, but still down. Today is March 17th. Forgot to mention at the top of the video. March 17th, and it's 9:30 Pacific time. I'm out on the West Coast. What's up? Okay. I have to remember I only have 15 minutes. Okay, so let's go to my chart list. I've had this account for 6 years. Okay. Let's look at that December low prognostic tool. I know we looked at this before. So what we're looking at is right over here. You can see that the Dow made a low past its December low, and apparently, according to one dude, Lucien Hooper, that is a warning signal that there is weakness to come. And although I am tilted bullishly, I have funds invested. 30% of the portfolio is. Definitely have my guard up because of the banking crisis that is going on. I keep using quotations today because I don't know how big of a crisis it really is. Maybe because we've lived through one and noticed that, hey, things kind of work out fine. But I opened up a bunch of tabs to go over about, a bunch of tabs about the different parties involved. So here, let me just try to break it down in my head. Okay, so you got the FDIC, you got the Treasury Department, and you got the Federal Reserve, right? Who espouse like independence? Well, the Federal Reserve and central banks, for as long as I've known, espouse independence. They don't care about politics, which is a separate issue, but they don't care about that stuff. Those three parties have come together to more or less instill confidence. To me, I think their actions is instilling confidence. However, I think that independence piece that is always being espoused is probably going away. And you know, the more I think about it, I don't think there was that much independence ever. Like in '08, when there was a crisis to the economy, they came together. So, not saying it's a good thing or a bad thing. I think they're just kind of bullshitting us a little bit when they say we're independent, because there are individuals that are elected there that work for more or less the government, right? But that being said, I mean, they're coming together, trying to bring some stability that's good into the financial system. I think that's been learned, that a healthy, confident financial system is important to just keeping everything going. So, yeah. Okay, let's take a look at this. Oh, I remembered what else I wanted to mention. And so this confluence of parties coming together and basically injecting liquidity is maybe good for risk assets. What has been moving a lot, what asset class is just like on everyone's radar and making waves again? Cryptocurrencies, bitcoins, and gold is back in the mix too. Technology is in the mix, but that might be also the seasonal strength that technology gets, which I've covered and documented a lot with the trading almanac. However, technology is further out on the risk spectrum, so you've got multiple risk assets that are catching bids. So that is bullish in that regard. It also tells us like there's a change in maybe sentiment going on. We could check out the fear and greed index later, probably not today. But yeah, so okay, what do we got here? The Dow is breaking below its December low, so we'll continue to watch that one. 20-month moving average, this is a very long-term look. And we want to take our attention to up here. And it's still below its 20-month moving average. It is above this trend, but it doesn't look too pretty. Okay. The pre-election and election time frame, this is the Dow. And what we're seeing is the new highs. There aren't many new highs in the index here, and price is falling, so we're seeing some weakness. We'll mention that I did add exposure to the portfolio, bringing it up to 30%, but I did it on the day where all the news was breaking out about the collapsing of the banks, and the MACD histogram showed a lot of strength despite a major short-term low in prices. So wanted to throw that out there. Although I might have a bearish tilt today, still got skin in the game, baby. Okay. Oscillator malware. Man, I always get this crap on my... Gotta clean this up. I probably need a new computer here. I'm using a Lenovo ThinkPad. If you want to hack it, go ahead. Okay, momentum here. This is a ADX line. It kind of tells you, how fast prices are rising. I kind of think of it that way. And green is above red. That is a little bit on the bullish side, but there isn't a real trend because the ADX is actually 15. You want the black line, the ADX, to be approaching 20 and going past that for it to be indicative of a sustained move. So we want to see this continue to U-turn upwards. Here's the NASDAQ 100. We had this downtrend since February, which in my latter videos I've been mentioning that it might be a good time to buy. We'll see if it holds, if we can get some strength into the later part of March and into April. Like seasonally, April is supposed to be strong. Then those are probably the only catalysts, as well as maybe the perception of looser monetary policy, not as tight over the next 12 months, may get this market going higher. And here we go, guys. This is the Holy Grail. If you can see my screen right here, this is the Holy Grail. The MACD histogram is making a lower low, and broke above and has registered a positive histogram. This is a buy signal. So that is the big question. I'm sitting at 30% invested. Do we go more? In that case, let's take a look at the weekly chart, right? If we want to take on more risk, I kind of want to feel a little safer. So let's take a look at a weekly. This is also one of my favorite ones. This gives me the big picture. This one, we do see a weekly uptick in the histogram and a pretty nice big candle. It's wiped out 1, 2, 3, 4, 5, almost 5 weeks on the upside, which is bullish. The volume is on balance. Volume is above its trend for most of 2022. That you could argue is bullish. And this super slow histogram that I got going on, I just honestly, really what I did was I doubled this to here to give the perception of a slower move, a more sort of steady move as well. And that broke out. So from my memory, whenever we see this type of look, right, the next little while here, it'll probably continue. However, that's not to say that in the short run there will be some price fluctuations. There are, right? There might be another crisis that just shows up miraculously. How much time do I got here? Okay, we still got some time here. Okay, so what do we see so far? We looked at the dailies, we've seen the weeklies, and we're seeing some bullish formation. Maybe that'll be going to carry forward. So just covering the tech sector. Lastly, I think I'll finish this video looking at charts, and then on the next one, the next 15, what I'll do is I'll cover some of the articles that I'm seeing and the tweets that I'm seeing, and share that with you guys. I think that'll be kind of cool. Okay, so let's look at the US dollar. Damn. That dead air is probably not so good for entertainment. I'll tell you that. And this is the US dollar. And today it is down. And momentum has really faded. The US dollar momentum has faded quite a bit, I think. And the S&P 500 is below its 25-day moving average. So we'll see what this means. We want to see continued weakness in the dollar for it to be supportive of equities, I think. That's my prediction. But plus, you know, when you got a lot of US dollars, you're going to pay attention to that asset class because it's an asset. It's a safe haven asset. And long-term look on a monthly basis, you could see that the 100 level is an area of long-term support. You can see here multiple times. You can see it hitting the 100 level. We broke above it sharply in 2022, but now we're just holding there. So let's see how it does. I did mark this up actually back in about early 21. I probably might have marked this, who knows, but this was a while ago that we saw this. Again, this is a lower low in the histogram, and lo and behold, it worked, because really this whole period, you could argue from 2015 to 2022 was a bearish for the dollar, and it finally broke out, but I think there's some weakness happening. Okay, now I got like 30 seconds left. I'm going to go straight to the VIX, if I can find it quickly. Okay, let's see how that is going. We've been watching the VIX quite a bit. The VIX is at 25, so it hasn't done a whole lot for us in terms of taking volatility away. It's still elevated, I guess, for this part of the year. The VIX is elevated. Okay, so that is just the basic charts review. I hope you guys found that entertaining. I'm going to upload another video covering the charts, article, sorry, on